Well, people, we got a very, very late trade today. Not a late trade, but a late recap in realist again. So today we took a loss. As you can see, we took a loss. I lost 0.59. Doesn't really make sense seeing that. Obviously, my account balance is like it was 10k on the dot, but it wouldn't allow me to risk. Anyway, like I said, from one of those lessons, I taught myself to just take the limit that the calculator does for me and not to over leverage because it's just not worth it today. Um, Let me trade. We did not go get some. Okay, so let's actually just go into today's trade. So coming into today, 9:45 we had flash market, flash news. Okay. I'm happy to remain patient and not take a trade until 10 a.m. when that 4 hour candle closes, foreshadowing I take a trade before 10 a.m. Okay. I even stay here, it's extremely important, but yeah, anyway. Here I'm just kind of recapping the clearer parts of the market. So monthly to be possibly reaching into this imbalance. This imbalance, this imbalance. Okay, monthly. Weekly, boom. Okay, we have a bullish SMT, and what do we do? Actually, no, this is the weekly, doesn't matter. So weekly, we see a bullish SMT, the developing discussion from yesterday's episode. We look to sweep it and get a bullish candle from yesterday. Okay, also that's the weekly, so it doesn't really make sense. But this is the daily, so what do we see? Well, we close below. Okay, we close below in a bullish candle. Now, when it comes to these sort of markets, I think I had like a trade scenario happen before or something like this, and I was a bit confused. But this day overall came out to be quite bullish. Okay, so I think next time it's in terms of looking at the candle. Okay, looking at if it's a up or a down close. Okay, um, but yeah, so we can see that we closed below bullish stance. We have the previous day low and previous day high of yesterday. Okay. With that, we do see a reason to tap back into internal liquidity, which can be a 4 hour bearish gap or an hourly. There is nothing with regards to internal liquidity on the daily. Okay, I've marked that previous day high and low. That might be clear draws. Now, if we go into the 4 hour, okay, on the 4 hour, we see that explosive candle from yesterday, 7 a.m., which was, I'll talk about that later. And we can see that we tap into it. Okay, we tap into it, and we seem to get a bullish candle moving away from it. Okay, so we form an intermediate time low. Okay, this could highlight bullish prices as prices rebalance it on both assets. This is only valid if we do close out of it, ideally on the 10 a.m. candle. For the 1 hour, we can see that we do retrace downwards, and what do we do? Well, during the retrace, we are respecting bearish PDRAs, right? Apart from this one, where we displace through it. Okay, we have a clear displacement through it. Then we have a bullish gap that gets wicked into and sort of respected. Okay. Pre-market, at the opening price, what do? We move lower before moving higher. So this is already creating a bullish bias, a bullish stance. Okay. Kind of ignored it towards the start of market open for New York. Yeah, we can see that we have this hourly gap that we actually tap into perfectly and move up higher from. Okay. Um, with regards to market sessions, we can see that Asia jumps down into the 4 hour gap. Okay, let me jump. Let me move down a little bit lower, take out Asia lows, maybe into move high into London. Okay, so London just further increases the momentum when we take out Asia high. And then we retrace back down into the hourly gap. So realistically here, we are looking at bullish prices. Okay, we are looking at bullish prices. So yeah, I think I kind of mentioned everything. As you see, high price for now, we can anticipate a new continuation higher as London reversed. Okay, London reversed, tapping into a key level and moving up higher. Okay, when we intermediate time low. It could also be the case where we consolidate now, resulting in New York possibly manipulating. Just a side note, so talking about yesterday's 7 a.m. candle, it happened because of Trump announcing news that Iran, he's announced a ceasefire on Iran for 5 days. Okay, which is good for the world. Good stuff, guys. We're becoming peaceful. But yeah, that's just the reason for that candle. Okay. Um, High time frame, we're just in this kind of range, right? We're just moving back to equilibrium every time. Okay. Equilibrium, retrace into an hourly gap, and probably gonna reach into equilibrium again. But overall, what we're looking at, bullish prices. Okay. We can see that line imposes a range. Okay, so kind of have the low to high, and we're just kind of jumping in. Okay. Now, this is my conditional bias. So A, we run lower, sweeping on the intermediate terminal low formed on the 4-hour bullish gap, which is exactly what I should have waited for. You know, I'm not gonna kind of be really angry at myself because so many emotions come into when taking a trade that you have to have a clear head. Okay, and my issue today I think was the lack of the clear head, and a whole bunch of stuff. Okay, so yeah, so we either run into that 4-hour low, okay, intermediate term low, and rally on high. Okay, B, we sweep out London session high. Okay, as well as yesterday's New York PM session, which we can't see here, but it's that purple line. And then we retest back into the 4-hour gap. Okay, ideally I would not like to see this happen, as we do like to be rather bullish, which I state again. New York AM opens and we get a continuation rally from the 1-hour bullish gap that London reached. Okay, so New York AM opens, we get a continuation rally from the hourly bullish gap, so we get a London, obviously, London reversal, New York continuation, in which I could look to catch a continuation long, or market continues to consolidate and we're not look to enter until obviously New York does something. Okay. Market took out this hourly intermediate time low. Okay, we can see it takes it out. This could be the accelerator for a bullish move. Now, as a side note, this is a mock entry of an entry block, right? Rejection block. This is I'm learning this stuff. Okay, so this was I think a 15-minute rejection block. We got a sweep of the intermediate time low. Okay, it's the sweep. Then we get a nice bullish displacement leg. Okay, we tap into this gap. We have another deeper retracement. We tap into this golden level here. Okay, we tap into this golden level, and stop loss is 20 points. Okay, I'm pretty sure that's what it was. So I marked that hourly candle. Okay, sorry, it's the hourly. It was an hourly rejection block, highlighting that we closed above equilibrium of that candle, validating the rejection block. Is that R8 or RB? RB. I then use the same fib level to enter on the golden level, placing a 20-point stop loss targeting this place high. This is something I'm simply just learning and not something I'm confident with implementing just yet, right? Why? Because look, we don't have any nice PD arrays to actually confirm it. Maybe there's a 30-second I didn't see. Obviously, I can't because I don't have the subscription for the 30-second, which is just something I'm gonna have to deal with at the moment. But yeah, stop loss would go to break even at this line. And that's kind of what would happen, right? Bang, stop loss there, break even, right? And price would take me out. Okay, price would take me out. Takes out this low once again. Okay, so at this point we are looking to be quite bearish, right? This was at that time, but on the high time frame we can see that we are actually quite bullish, right? Why? Well, because we tap into the 4-hour gap, we move up higher, and we're seeing a whole bunch. We move lower in midnight before moving higher, all that stuff. Okay. We saw that higher time frame intermediate term low that formed in the middle of Asia and London, which seems to be a clearer target here. I'm going to remove all these drawings and get back on track. So post market, what happens? We get an SMT at this level here. Okay, we get an SMT. Generate bullish SMT on ES. I'll look for my entry at this point as we have also reached a key level where what do? We retest the 4-hour gap again. Okay. I do want to pay attention to the 15-minute gap. Is it here? Yep, so it's the 15-minute gap right here. I do want to pay attention to it. So we'll see if we do rally into it and we displace through, then we're bullish. If we have some sort of weird action going on with it, then we can look to take a short. Okay. ES reaches it, and NQ seems to be providing weakness. So what do we get? An SMT fill. Okay, we get an SMT fill. This is the same 15-minute gap. I think no, NQ reaches it, so the SMT fill isn't ES. Okay. So yeah, this is where two areas are sort of going. They're like it's causing friction. Okay, so it's best to just remain patient. All right, we still have 9:45 a.m. news and 10 a.m. for our candle to wait to see close. All right. London's hourly bullish gap gets close through. Okay, we get completely close through it. Okay. Now, given this just looks like a higher time frame retracement where we have the low to the high of this 4-hour range, and we're just tapping into a further discount. Okay, especially at that gap, right? So at that current moment in time, when I saw that hourly candle close below this bullish gap, I was like, all right, we might be quite bearish, right? And I was thinking price may actually come complete all the way down and fill in the 4-hour gap. Okay. Sorry, guys, that's how fast I paused that. So yeah, after the 1-hour bullish gap, we displaced through highlighting current bearish prices. Now, after all that stuff I mentioned at the beginning, I flipped to a bearish bias. Okay. That's just what happened really. I do entries on ES as we have that bearish SMT, right? So yes, we get the bearish SMT. Why? Because we don't get the fill. And where was this entry? Well, we had a market structure shift on the 3 minute, change state delivery on the 3 minute, and we have a gap, right? Here we are. I was expecting price to maybe tap into this golden level of this displacement leg. Right, ideally, the displacement leg actually begins from somewhere higher over there, and then we catch the short. Okay, so that quality wasn't the best ever as well. So this trade, we get 15-minute SMT fill on ES for the 3 minute. Literally, as I mentioned, in this guy, I will not be surprised if price wicked into the golden level. Stop losses at SMT high and TP is at the low of the 4 hour gap. Right, if price is bullish, we will take out this area unless we're going to continue bullish, and this was simply a retrace deeper into the gap to get more buyers. Okay, so what happens? I get entered in the trade. I've looked at the 4 hour, and I've looked at the 4 hour and seem willing to cautiously try stop loss when we reach these golden levels of the gap, right? If we do reach it, okay. And what does price do? It quickly just comes down and it takes us out. Okay, it works us out. So the lesson learned today, I think the issue with the trade today was that it was quite rushed, right? We do not look to be bearish on the day, therefore it seems a bit wrong to take a short on this day, okay? Long term, we're bearish. However, at this current moment in time, we are in a bullish 4 hour key level, right, in which we either respect or displace through. The entry was followed via my strategy, therefore I can't really say anything about that, right? We followed my strategy to the key, right, and that's completely fine. However, one thing that I did, not we, is that I traded against intraday bias. Okay, we've been pushing for higher prices since yesterday, and this was a retracement into the 4 hour bullish key level. Okay, therefore highlighting bullish prices. Okay, it could also be that it was just a stop hunt and then we continue lower. But obviously, if that's the case, then it's either an issue of my stop loss or the issue of the S&T fill on that gap not holding well enough. Okay, this could have been a much better trade idea. Why? Well, we have the S&T and then we have this nice leg down, and then we have a gap in the 1 minute within the golden level. Okay, wait for the turn candle, and seeing here, it would have not been successful. Okay, we would have tapped in, continue to consolidate, have a shock down like that, and then rallied into the 15-minute level again, in which we were sort of hovering around. Okay, yeah, we're being very reactive from the 15-minute gap. Now, overall, what do we see? Price is bullish. Okay, so market opens right here. We take out some early sellers. Okay, we take out the sellers, manipulate downwards, taking out what? The 4 hour key low, and then we begin to start pushing for higher prices. Okay. But yeah, that's today's trade. Bit fortunate, but it is what it is. I do want to kind of pull up the trade now. Not the trade, but market I'm in now. And this is the sort of trade that I had. Well, we actually look at it. Where is it? Well, here we go. So what ended up happening was, well, we had a rejection block right here. Right, why is it a rejection block? Well, if we look, we can see that I think this is the same kind of level 45. No. How did I take this entry? I think it was just simply on a retrace of like a displacement leg. Yeah, it was. But yeah, here, this trade I feel like was way cleaner. Why? Well, because look, we get an SMT, okay, at this area. Where is the SMT? Lunch. We get an SMT, right? We have a 1 minute SMT right here, bang. Okay. Price moves lower, and at this point, right, well, the correct thing that I did here was I just continued to sort of move on the lows, okay? So what I would have done beforehand was probably some dumb shit like put it here, and then we tap into this like level or this gap, and then I take a short, right, which is way too early. But here, right, or even here, right, what we see is we have a gap in the discount and just near the key level, right? Just near the key level. So I think this gap held high probability at the entry here. Stop loss was about 20 points. Okay, about 20 points. So even if we did, let's actually do say 20 points, right? 20 points. This would have been a super high risk to reward, right? And what would have been enough for me? Well, these lows instantly. These lows are instantly more than enough for 1 to 3. and then obviously I could have a runner targeting these lows. Okay, look at all this low resistance liquidity. You kidding me? Which would have been a nice trade, right? Obviously, I think this golden key level is the thing that's the blueprint to sort of taking a trade. Let me actually just kind of go away from any. Okay, so let's just draw it out. So let's say we get bang, okay, on the higher time frame. Okay, so this is, for example, like Inky. Okay, and then at this point, what do we get? Well, ES does the same thing, however, we see weakness. Okay, so let me just draw this out. The trade recap's done if you want, but I'm just kind of doing this for myself, right? So NQES, so what do we get? Well, we get blasted liquidity, and we get an SMC here. Okay, we get an SMC. Pick it up. Okay, so we get an SMC, and then at this point, we're looking to trade on ES, right? We take this associate to this area, okay, and we wait patiently. The CRC and the market structure shift would have already happened. If it doesn't happen, that's fine. I want to see, obviously, within this leg, I want to see bearish, bullish gaps be disrespected. Okay. So we'd tap into a gap within this area, have quite a tight stop loss, I'll be honest. So let's say even the gap is like right here, right? Let's be really hypothetical. Let's say the gap is like right here, okay? Gap. I would place the entry somewhere here, right? Literally at the tap in of the gap. And then obviously since that's the zero displacement, target that, okay? And then have, say, a 20-point stop, right? This is much bigger. So it'd have to be something like that, right? Or it would simply be an area where maybe there's even a gap here. It all literally depends. If there's a gap here, then obviously my entry is going to be a lot higher, right? Price taps into this gap and it moves over, that's completely fine. That's just not my trading, right? That's not my trading because I want super perfect trades, right? You're not going to get it every time and that's completely fine. But the fact of the matter is this is something that I want to look for, okay? Bonus points is if we kind of wick, right? Let me just show you an example. Bonus points if we do something like a wick, right, of an hourly or a 15-minute, something where here, for example, we see we have these lows, we take it out. So if we have a look, right, range of this candle, okay. Do we see how we close above equilibrium? Makes it a valid rejection block, okay. And then at this point, what do? Well, we scale down, okay. See, this is the trade that would be a loss, right? So let's just kind of continue this on. So we get something like this. You have a nice 15-minute or probably a 5-minute gap here. Yep. You get a nice super clean 5-minute gap here. The price tap us in here. Not at that point here. It would tap us in. Let me check with a 602, 0225, right? 225. What would the stop loss be? Well, somewhere here. And where would I target? What's going on? Where would I target? Something like this high or these low resistance liquidity highs, right? So like this would be fail, and that's completely fine. Obviously this is not a valid example. Why? Because we do not close above equilibrium. Okay, we want to see some bullish price action at this point. Okay. But yeah, once again, it's just something about refining really. Catching nice rejection blocks is clean, right? It's actually quite interesting, if anything. Yeah, 4-hour, we might be getting one here. So look, closing below, right? If we close below, valid rejection block, what can we look for? some sort of displacement to obviously catch energy back on. Right. Okay. I'm talking too much. That's that for the trade recap. Hope you guys learned something from it. I'm not gonna backtest today, but I will get to backtesting tomorrow. Okay. Thank you guys for watching. And I will see you lot tomorrow as always. Bye bye.